Ever felt like you're playing whack-a-mole with stocks? You pick one winner and another one tanks. It can be exhausting. But what if there's a smarter way to invest? A way to ride the big waves of the market instead of getting caught in the small ripples. That's exactly what we're talking about today, sector investing. By the end of this video, you'll understand how to analyze major market sectors and position your portfolio for what's coming next. So, what exactly is a sector? Think of the economy as a giant pizza. Each slice is a different sector: technology, healthcare, energy, financials, and so on. Instead of betting on one tiny pepperoni, which is like a single stock, you're investing in the entire slice. This is powerful because different sectors perform differently depending on what's happening in the broader economy. Let's start with a crowd favorite, the technology sector. This is the home of innovation: think artificial intelligence, cloud computing, and the latest gadgets. For years, tech has been a growth engine. The main drivers here are constant innovation and our increasing reliance on digital solutions. When you're analyzing the tech sector, don't just look at the big names everyone knows. Look at the underlying trends. Is AI adoption accelerating? Are businesses spending more on cybersecurity? These are the questions that point to future growth. A key metric to watch is R&D spending, research and development. Companies that invest heavily in R&D are planting the seeds for future breakthroughs. Another thing is corporate and consumer spending trends. When the economy is strong, both companies and people are more willing to splash out on the latest tech, which fuels the sector's growth. Now, let's switch gears to another giant, the healthcare sector. Unlike tech, which can be very cyclical, healthcare is often considered more defensive. Why? Because people need healthcare services regardless of whether the economy is booming or busting. You don't put off a necessary surgery just because the stock market is down. But healthcare isn't a simple buy and hold either. It's heavily influenced by government regulations, patent cliffs for drugs, and breakthroughs in medical technology. When analyzing this sector, you have to pay close attention to the political landscape. What are the current policies on drug pricing? Are there changes coming to health insurance? These can have a massive impact. Also, keep an eye on demographic trends. It's an aging population, like we're seeing in many developed countries, means a greater long-term demand for healthcare services, from pharmaceuticals to senior living facilities. This brings us to a crucial concept: sector rotation. The economy moves in cycles: expansion, peak, contraction, and trough. Smart investors don't just sit still. They rotate their money into sectors that are poised to do well in the next phase of the cycle. For example, during an economic expansion, cyclical sectors like technology, consumer discretionary, think luxury goods, and travel and industrials tend to perform well. People have jobs. They feel confident, and they spend money. But when the economy starts to slow down, investors get nervous and defensive. They rotate into sectors like healthcare, consumer staples, things we always need, like food and toilet paper and utilities. These are the all-weather sectors that provide stability when the market gets choppy. The key is to be a bit of a detective, looking for clues about where the economy is heading. Are interest rates rising? Is inflation a concern? These are the signals that tell you it might be time to rotate. So, how do you actually do this? You can invest in sectors through ETFs or exchange-traded funds. There's an ETF for pretty much every sector you can think of. For example, if you're bullish on technology, you could look at an ETF like QQQ or V. If you think healthcare is the place to be, you might consider XLV. These funds hold a basket of stocks from that specific sector, giving you instant diversification within that slice of the economy. It's a much simpler approach than trying to pick the one or two winning stocks out of hundreds. Now, let's gaze into the crystal ball and talk about potential trends for 2025 and beyond. Of course, nobody can predict the future with certainty, but we can look at the mega trends shaping our world. Artificial intelligence will continue to be a massive driver, not just within the tech sector, but across all sectors. Companies in every industry, from finance to manufacturing, will be using AI to become more efficient. This is a horizontal trend. Another one is the green energy transition. The global push towards sustainability and renewable energy is creating huge opportunities in the energy and industrial sectors. We're talking about everything from electric vehicle manufacturers and solar panel producers to the companies that build the new energy grid. Finally, let's not forget about shifts in global supply chains. As companies look to bring manufacturing closer to home, this could create a renaissance for the industrial and materials sectors in certain regions. To put it all together, successful sector investing is about understanding the big picture. It's about knowing which sectors thrive in a growing economy and which ones provide a safe harbor during a storm. It requires you to keep a pulse on economic indicators, policy changes, and long-term societal trends. Think of yourself as the captain of a ship. You need to read the weather charts, the economic data. Know when to raise the sails for speed and when to batten down the hatches for safety by rotating your investments through different sectors. You can navigate the market cycles more effectively instead of just being tossed around by them. It's a proactive strategy that puts you more in control of your financial journey. Thank you so much for watching. I hope this gives you a solid framework for thinking about sector analysis. It's a powerful tool to have in your investing toolkit. If you found this helpful, please hit that like button and subscribe for more content to help you become a smarter investor. See you in the next video.